What's up, everybody? Thanks for checking out this video. We're live on YouTube. I got a Zoom meeting going on. Thanks to everybody who's checking out the Zoom group. All right, we're talking about trading, y'all. Man, so many questions about trading. So many things going on in the financial markets. It is pretty insane. It's unprecedented. We're seeing all kinds of news break. You got all kinds of news in crypto, all kinds of news in the stock market. You got tariffs. You got all kinds of different things. Executive orders almost every day. It's crazy. It's amazing. It's a great time to understand the financial markets. Hey, if you're watching on YouTube, thanks for watching, man. I want you to go ahead and chime in. Tell me where you're watching from. If you got any questions about what I've been posting in the last several weeks, the last 2 months, especially, I mean, since January. January has been just an amazing, and February was an amazing month of trading in the stock market. Man, I put out a ton of different videos about trading the NASDAQ 100, which is that's where I go every day. Every day I'm on the chart. 8 a.m. and typically I've been kind of finishing up like around 9:30. So roughly about an hour and a half of just watching the market set up, and then we see a move, and we leverage the move, and we capitalize on whether or not news has broke in the market, and whether the market goes up or down. Don't matter. We're going to do our best to risk proper and to trade with our edge. And I want to talk about our edge today. I want to talk about our edge. I want to make you aware of what it is that gives us, what I've learned recently is this idea of positive expectancy. All right, type it on the line if you're listening, if you're paying attention, if you're watching. Grab a pen, grab a paper. We're going to go to the chart here in just a second, and I'd love to take your questions. Let me go ahead and let me share this. I think I forgot to share. Do me a favor and click like and share this with somebody. Let me do that while I am thinking about it. We're going to be on just for a few moments, so let's go ahead and share this with the group, man. Let's share this with the crowd. Let's go ahead and get some folks up in here. I don't want to wait too long. You know how some folks, they wait and stuff like that. But I just want to keep it going. I'm going to say, come through. I'm live on YouTube. And I'm going to put the lights, camera, action. We'll put that right there. Bang. All right, so we should see some folks show up here from Facebook. And then we'll put one on our story real quick and just let everybody know that where we at, man. We're talking about the NASDAQ. It's a good time to get acquainted. At least get acquainted. You don't have to be an expert, right? You don't have to be a crypto expert to be able to understand what's going on. Like, trust me, if I can do it, sheesh. I'm trying to tell you, if I can do it, I'm just a knucklehead over here in West Texas. Then you can do it. And now is the great time to understand this thing. I mean, it really is. It's like, let's go. I'm going to put on here, I'm live. Come hang out on YouTube. It's been a minute since I've been live on YouTube, so still looking for these comments to come in. Y'all come on in. Let's take some questions. All right. Looking for a red dot. There it is. All right, cool. And then, what else? Is that it? That's it. Next. All right. Now we can move that around. All right, I'm waiting for wait for this thing to chime in. All right, so that's an alert. So our alerts that tell us when to enter and when to exit the market is one of the ways we have an edge. Excuse me. All right, now we can move that around. All right, I'm waiting for this thing It must be that West Texas dirt, man, making me call sneeze like that. Yeah, so the alerts give us our edge, our tools, right? Our tools, our plan, strategy, rules, and tools. That's what it is. Plan, strategy, rules, and tools give us our edge. All right, so I'm going to post that to the stories. All right, let's see what happens, YouTube. Man, you know what? I really enjoy YouTube. It gives me a good chance to really just cover a lot in a great, approach, a great strategy to reach as many folks as possible. Plan, strategy, rules, tools. That's what I'm going to be preaching. That's what I'm going to be talking about. I mean, probably till forever. Plan. What's the plan? What's the strategy? What's the rules? What's the tools? Those are the things that get us involved in the market. Those are the things that get us to exit the market. It's not because everybody else is buying crypto and holding it, and buying XRP and this, that, and the other. Oh, I made $1,000 in a week. I made $1,000 in a week, so I want to buy this thing and hold it. And then all of a sudden it dumps and you lost your money. And then what do? You go off and start crying, man. You got to go get therapy now. Now it's costing me my money that I put in crypto and costing me money to go get therapy. Because I bet the farm, man. I bet my kids' college tuition, man. And Bitcoin was supposed to go to $1 million. Anyway, yeah, it's just one of them things. One of the things that I've learned in the last, how many years have I been trading? I started in 2020, but I really got serious. I knuckled down, man. I really got down into it in, I would say April 2021. April 2021, we made a decision. Yeah, this is the thing we're going to go after. I'm going to master this thing. And I mean, when I say master, I mean be able to manage. That's a good word. Just manage what is happening in this market. So if you made it this far in this video, I sure do appreciate it. Go ahead and click that like button and click a share button. I'm going to leave this up for a while. We're about to go to the market. And I want to show you what happened today, March 6th. At the time of this recording, and it's a Thursday. All right. I mean, it's really, 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 really interesting what goes on. And you could say, this is just, hindsight, but we trade every day live in a group every day. If you want to be part of that, just let me know. Reach out, however you want to reach out, social media, email. I'm all over the place. I'm all over the place. AaronDchannel. You can find me. All right, here's what I'd love to do. Just take you through a little bit of what's going on. Typically, I start at 8 o'clock and then I'm done by 9:30. I just want to be done. I don't want to wait all day. I really don't. Okay. Let me introduce you to how we were managing the ebbs and flows of the market today on a Thursday. All right? All right. So let's share this screen, shall we? Let me throw the market up there. Let's go. Here is our chart. This is also a test of, I think we're going to go ahead and live stream to YouTube every morning for a little while and see how it works out. All right, here's our chart. Okay, so here's our chart. Here's a couple of entries that we took. Let me go in a little bit of detail why we took those entries, okay? All right, and why we made our stop loss, where we made it, and why we got in, why we got out, and what we risked. All right, so the holy grail of trading, any kind of investment, right? Taking any kind of investment is understanding the risk. Come on, somebody say risk. Somebody say risk, because that's what it is. You're taking a risk. You're taking a risk on a very volatile, very, very, very disruptive market. All right, so this chart tells us what's going on. For those advanced traders, you already know what I'm looking at. You're looking at the overnight NASDAQ. Okay. And we started out here yesterday at 5 p.m. when the market opened. And then we ranged and we broke that range right here and we continued down and we just continued them out. So what I'm thinking at the beginning of the New York Stock Exchange is potentially going to have a retracement up and somewhere in here will fall. All right. So I like to deploy this beautiful cloud. You can barely see it, but it's there. The beautiful cloud. And it is showing signs that the bears are in control of the market at the moment. And that is a 15-minute time frame EMA. And here is a 1-minute time frame EMA with the bullseye, right? The bullseye, arrows, and clouds. Okay, bullseye, arrows, and clouds. And the idea is if this cloud is red, I want to take these red arrows as entry. Well, I don't want to see all them green arrows, so we're just going to turn them off. Simple as that. Now, every time these arrows print, that is my automatic signal to enter a sale. Okay, we want to enter a sale right there. We want to enter that sale. We want to just automatically, don't think about it. Look, don't have to think much. Don't discuss much. Get on the bus, Gus. We're going downtown over here, okay? But we don't want to enter these entries when they are far from this cloud. We want to enter them when they are close or in, right, this cloud. And as it gives us a signal, we fall. So that happened here at 6 a.m. All right. And then it happened again here at 6:32. And then we get all the way here to the open. Here's 8:30. There was one here right before 8:30 opened. The New York Stock Exchange opened. And it was at 8:20. So now, here's a couple things that I like to mark up. I like to mark up these flat bottoms. Okay, these flat bottoms, the 4-hour flat bottoms. If you want to know more about that, ask me about the masterclass. That masterclass is amazing. All right, so here's that first 1 minute. We're on the 1 minute time frame. That first 1 minute candle prints, and I want to mark up the high and the low. Okay, and I'm just going to label that 1M so I know that's the 1 minute range. So the opening range breakout, right? We've heard about this. You've heard about this if you've been anywhere on the internet. You checked it out. You've seen it. Here's our approach. If I have this red cloud and it breaks beneath, I'm gonna sell. If I have this red cloud and prices is beneath that red cloud and it breaks above, I'm gonna buy and take it to that red cloud. That's it. Ain't nothing difficult about it. Here's the next candle. That next candle is a breakout beneath. So what we just said, we're gonna take a short. All right, what's the stop loss gonna be? What I've realized is 50 points has been a pretty decent stop loss, right? For NASDAQ. But it doesn't cover the top of that 1 minute range. So I'm gonna cover the top of that 1 minute range, 55-point stop loss. Okay, and I wanna see how it reacts to this 4-hour flat bottom. All right. So as it starts to make its way into there, I'm going to take off and I'm going to protect and I'm going to secure and potentially take profit. Okay. And then see how it reacts at that flat bottom. Here goes the next candle. A doji candle followed by bullish. So this would give me a reason to potentially entertain closing some of this trade if I had more than one contract on, or if I was risking 1% or less is the idea, right? So maybe I take off 0.5% here. If it gave me reason to believe that it wants to go up higher with volume. So that next candle is no volume. Okay, here's another candle, volume down. Another breakout of the 1 minute range. Now here's where, because it's 8:35, I want to mark up that high and low between 8:30 and 8:35. Now I'm looking for a breakout of the first 5 minute range. So far, we've respected the bottom of the 5-minute range, but we've broke beneath and closed beneath the 1-minute range, and we are so far away from here. I'm looking for a reason to buy. Even though I'm in this sell, I need to know when to get out. So we're gonna see what happens next. Okay, right here we saw a candle almost touch. Almost. I mean, it came within ticks of that thing getting touched. So this tells me, this tail right here tells me, buyers have stepped in. Buyers have definitely stepped in. All right, we're gonna see if this thing wants to touch that 4-hour flat bottom. It doesn't. It shows signs of continuation. I am closing. I have to close because of what? Cut the loss short. Why not? Cut it short. Now, do we enter into this? Potentially you could. Potentially you could. Why? Follow through. It cleared this red bar here, but do you have a reason to enter? All right, so let's continue to look. If I put up the bullseye, previous day high and low, we have yet to touch that previous day low that's sitting right there. Okay, so this would be a very aggressive entry. Okay, but the stop loss would definitely be 50. If it didn't cover that low, I would want to cover that low right there, 60. Okay, 60 points. All right, next candle. What happens? We get follow through up, and we peek our head out above the 1 minute, but did not close. Right, so we're looking for a close above that 1 minute range, 5-minute range. Okay, we're getting close to 8:45, so I'm going to mark up the first 15-minute range. We saw a decent volume down here, but it is a higher low. So as soon as I see that, I want to see if this thing wants to continue following that path. All right, followed by, okay, so the next candle is a green clearing candle. It clears that red candle. And then we see it retest one more time. Breaks beneath that deal. That's a definite breakout again of the 1 minute range. But now I have to see follow through down. I have to see follow through down beneath the 5-minute range. If I see follow through up, then I need to readjust my, I call them local trend lines. And there's the follow through up. Now, this would be another reason to enter. Why? This green cleared this red. Stop loss. Well, if we did it for 50 points, it would cover the low of the 5-minute range, but it wouldn't cover this wick low. And that's what I want my low to be covered. Right there, right there. And look, I'm going to target what? I'm going to target this red cloud right there. Check this out. Get indecisiveness. Looking for follow through. There's a bit of follow through. Didn't clear that red candle yet. And there we clear. That's what I want to see. I want to see us clear the red sellers. I want to see green clear the red. I want to see the buyers overtake or engulf. You know, these by engulfing candles. I want to see it engulf, right? So it engulfed this whole push down. Now we're pushing above it. That's a break of structure. I'm targeting the bottom of this cloud right here and potentially going to close probably half of my position or all of it, which it gets hit right there. So there's 50 points. There's 50 points. That's 100 points. I mean, fearless. No fear in this market. Now, I'm looking to see if this thing wants to run up. And if it wants to run up, what will I target? Well, I already took some off, protected, potentially. Take partials, leave a runner. I'm going to target the bottom of that 12-hour range. If you want to know about 12-hour range, jump in that masterclass. Let's see. Price gives us a reason that it wants to come down here with a little bit of bearish volume. If you're protected, you definitely get knocked out in profit, which no one's mad about that. But now we're looking for a reason to enter again on this buy. Okay, we have a red cloud and a red arrow, but no follow through down. We have to see follow through down in order for us to take it serious at least. So we get 2 candles of indecisiveness, 3 candles of indecisiveness, and then we see a candle that wants to peek its head out one more time, and we're looking for a close above. And there's a close above right there. We're still getting signals because the market is still open. Right. So now we take this entry. 50-point stop. Doesn't cover the low. I want to cover the low right there. All right. And I want to see if this thing wants to touch this bottom of this range. This is a 12-hour range. Okay. Looking for follow through. There is a massive follow through. Of course, we're already at 9 o'clock. So we could potentially say that the low of this 836 candle is the low of what's called the initial balance. So we'll see how it works out when it gets closer to 9:30. So I'm going to move this over to 9:30 and we'll see if price wants to continue higher. So we're watching this candle print. We hit our target right here, show signs of rejection. Potentially want to take partials, protect, leave a runner if you can, or just take profit. No one's mad at you taking profit, dude. Just go. Oh, by the way, that was a beautiful rocket, that print back here. What is that rocket? Well, that rocket is a custom tool we use called the bullseye line. All right. If you want more information about that, let me know. Would love to walk you through that. Okay. So now, all right, now we are making our way higher, hit this first fib level of the previous day high and low levels and broke above. Now I want to see if it wants to come and touch this level. Let's see. We'll speed this up. All right, so price does a little sideways motion. We're looking for this thing to break structure up. It peeks its head above it. Now we need that follow through. There's the follow through. Just want to show you how to hold these trades, okay? Hold this trade. Until when? Until this trend line gets rated, potentially. Okay? All right, so we're watching this thing print, looking to see if it wants to come and touch our target. There's our target. Target is hit. Target is acquired. That, my friend, is more than 150 points, 167 points. Now, we have this 15-minute EMA sitting right there. That's 189 points. We're just going to see it retrace a little bit. We're protected, so it's a risk-free trade. We see the price wants to continue up with this green candle here, so we're going to hold this and see what happens. We see a little bit of retracement. Then we break a structure up. We touch the bottom of this cloud, and it starts to give us what we anticipated when it hit that 15-minute cloud, and that is time to reverse. And we are at the 9:30 initial balance high right here. So I like to mark that up. So we are taking this low to this high, and we're calling it initial balance. Boom, just like that. Now the idea is price could potentially come and touch the midpoint of that range. Okay, the midpoint of that range. So the midpoint of that range is right here. We're going to see how it reacts to this trend line. It could potentially come and touch this trend line and bounce right up. Don't know. Don't care. When would we consider entry? More than likely. I mean, I like this entry right here. Let's see if we get a pullback. So here's a definite entry here when we see that pancake. That's that bullseye line, baby. That bullseye line is crazy. All right, so we'll take that bullseye line. 50-point stop, 50-point take profit would not cover the high of this push down. So we would want to cover the high. Seems like a bit much, right? So we would target at least the bottom of the IB high and low. Let's see what happens, because I don't know. All right, we're going to go faster. So prices continue to drop, and it makes its way up. It retraces. You get a signal to buy, and then you get another signal to sell. It breaks beneath the trend line, and retests the trend line, then follows through, touching the first 4-hour flat bottoms. Let's see if we can make to the next 4-hour flat bottoms. Price just decides it wants to melt in the afternoon. So our entry was correct here with stop loss that covers the high. Then we get another entry here as it breaks the trend line. 50 points does not cover the high, so we want to cover this high for sure. All right. At 10:30, you see a huge push up trying to grab liquidity, but our stop loss holds up. Here's our entry right here. Previous day high and low gets hit, or the low gets hit. And then you just let this thing wait. So it's 180 points down, 195 points down. Today was a crazy, crazy volatile day. Volatility was just through the roof. So we let this thing print. Right now we're sitting at we're sitting at 3 o'clock. All right, so what we'll do, we'll just forward to where price currently is, and as you can see, price just made its descent to another flat bottom level right there. So these two cells, one goes for 385 points, one goes for 370 points. If you want to know more about the 4-hour flat bottoms, please ask about this masterclass. I definitely want you to get involved with that. Super, super great. Super great. Super great. The trend line gets touched, retrace, gets rated again, fall beneath. There it goes. So 50 points, 100 points, 190 points, 385, 370. I mean, there's not much more you can say about that. Using the proper tools, rules, plan, strategy. That's it. Plan, strategy, rules, and tools. That's what we're gonna do here on this channel. And we're gonna risk proper. You're taking your steps to profitability. That's it. You're taking your first steps. If you've never seen anything like this and you're just wondering what's going on, we put it all in a masterclass. And I think the masterclass is something that you want to get your hands on. If you want to know more about it, I call it the Infinite Trading Masterclass. Go over everything in the course. All right. Chart basics, psychology and risk. I mean, a lot of great things. All the tools, right? A beautiful bullseye map is what we used. And then a lot of bonus content. I mean, come on. If you want to know more about this, drop me a comment. I'd love to share it with you. So, I mean, today, Thursday, typically, that's how it is. We just go by the book. We take the orb. We take the opening, opening range breakout, right? 1 minute, 5 minute. I really start to tend to take off the 1 minute and just go with that 5 minute. And just wait. But I like the 1 minute. I'm not giving up on it yet. It just seemed like we was taking an L out the gate and just, sheesh. But how'd you scalp? That was 28 points. Okay. And then you just watch price print. Okay. Let me tell you what about trade. Trading has been our teacher. Not just how to master the charts, but how to master ourselves. How to master our emotions. How to master the mindset, the skill set, and the tool set. Okay? And the great thing is we get to do it in a community. All right. So that's the part that I just love. Man, I sure do hope this helped out somebody. If you found this video interesting, you found this video valuable, click the like button, click the share button, click the subscribe button.